Welcome back. Let's welcome a regular guest to our program. Bryden Teich is Chief Investment Officer and Portfolio Manager at Avenue Investment Management. He's in our studio right now. Thanks for coming in.
Thanks for having me.
So we've been talking, as you can imagine, about the tariff threat that Canada's been facing for some time. You think that the market has priced this in, and you don't think 25% tariffs are coming in early March, correct?
No, I think what's interesting is the news flow a couple of weeks ago was sort of so quick and dramatic, and the market obviously reacted very negatively to it. And I think what sort of became clear afterwards, and this is more even in the reaction to the reciprocal tariffs last week, is that the administration in the US seems like they have the strategy to sort of go guns blazing at these issues and in their mind, at least sort of check them off the list as having done something. So Mexico, issue with the border, they view as resolved. Canada, there's a guideline to what they can do to not have the tariffs. They're now, the vice president was in Europe last week talking about technology, and now they're focusing on sort of Ukraine and Russia. So you can just see the playbook is that they're just trying to roll out as much as possible, as quickly as possible. And I think the market reaction to the reciprocal tariff news last week and over the weekend, I think my takeaway is that the market has digested this, and I think that we're moving into probably a period where the market may not take a lot of these threats as seriously as they were a few weeks ago, because I think the playbook is now sort of revealing itself. And I don't think tariffs are coming on across the board. If that were to happen, then that's obviously the wrong analysis. But my interpretation and the way the market's digesting this so far suggests that a lot of this is now being priced in to the individual names that would be affected, and it'll be on to the next news cycle and next topic.
And that would include Canadian stocks as well. There are certain sectors of the Canadian economy that we think would be heavily affected. The auto parts sector comes to mind. Manufacturers more broadly come to mind.
Absolutely. I think the other, and speaking to your last segment, I think what will persist, and this is actually the risk, I think, is that the uncertainty about the business environment and the investment environment, I think, is going to stay heightened. And so you're going to be in an environment where the risk of uncertainty remains high, and the fact that that is likely to maybe change business activity or investment schedules this year, that will have an impact on the economy, but that's sort of a slower feed through. And I think the market will be much more quick to digest these headlines, whereas the underlying uncertainty in the economy is likely to persist. But there's sort of then, it's important to break apart what is the stock market doing and how do people feel about it, and then what's the underlying economy doing. And I don't think the tariff risk is going to go away for the underlying economy, because I think for businesses making investments, I think it's something that they have to take seriously.
Okay. The Fed, there's also significant debate now on how many times the Fed will cut, if at all. Some people believe during 2025. What do you think?
Yeah, I think they've now laid the groundwork to be much more patient on cuts from here. And I think where we are in the cutting cycle, I would say, I think we're past the point where the cutting cycle is a sort of net stimulative for the market, because we're in a non-recessionary cuts. Usually the market views as a favorable development. But I think what they've done and the way they've explained their position is that any cuts from here are going to be because the economic environment deteriorates, and that won't be a good setup for equities, I think. So we're at that point where, cuts have been okay and digested by the market in a positive way. I think cuts from here will be because the economy is deteriorating, and I think that the market will not respond well to cuts from here, where we've kind of digested these first few cuts in a non-recessionary way. But they've really set a high bar for the expectation for future cuts. And I think the other thing that still hangs out there is Powell's term is done, I think, in May 2026. The Treasury Secretary, prior to being nominated, had floated this idea of nominating a Fed chair early and essentially being able to give forward guidance with that new person. So I think Powell's in a position where he's just trying to sort of manage his own legacy. If we can avoid a recession from his perspective, that would be ideal. But I don't think that they're going to be gung-ho to cut rates from here unless the economy deteriorates, which will then be a sort of a negative scenario.
Okay, we always love to get your stock picks, and you've got one for us today, AutoZone. That is, I believe, a company that owns car dealerships. Is that correct?
So the AutoZone is automotive retail,
Right.
so secondary aftermarket parts.
Right.
I think this is a really stable business that we've owned for a long time. We think that this year, particularly with the weather that we've experienced, is going to be sort of a big year for auto part repairs and maintenance on cars. And I think the underlying drivers of this business are average age of car in the U.S., average miles driven per year, and I think that those dynamics are very, very favorable for this business. And I think the added element is that the weather is going to cause a lot of car repairs through the summer, and I think that will be a good year set up for AutoZone here.
It's currently trading the stock. I see it at 22.5 times expected earnings. What do you think of that multiple?
Yeah, I think it's a fair price for a business that I think has these underlying characteristics. The concern would be if a tariff war with Mexico accelerates, because AutoZone is making a lot of investment in their Mexican business. So that's a concern or a risk. But I think the market has digested the shares with that news, and I think that it's a good setup from here as a long-term investment.
Bryden, always good to have you. Thanks for coming by.
Thanks, Paul.